The Canadian government's latest mortgage reforms are a complete game changer, finally addressing the housing affordability crisis that has been plaguing both millennials and Gen Z homebuyers. By increasing the insured mortgage cap from $1 million to $1.5 million and extending the ability to have an amortization for a mortgage from 25 years to 30 years for insured mortgages, these very reforms directly tackle the financial barriers that have kept younger Canadian families from owning homes. And if you're someone who's considering buying a home and you don't investigate your options and you don't understand how these new changes are going to impact you, you risk being left behind as the market shifts. Now, don't get me wrong, these reforms are designed to help people just like you. But if you're not proactive, there's other factors at play here that you're also going to want to understand. These are things like lowering interest rates and competitive bidding wars if the market comes back to a place that it once was in 2021, 2022. Well, this could push home ownership further out of reach for some. So taking the time to further understand these changes and how significant they are likely going to be on the market, especially in areas like the GTA of Ontario, in and around the Toronto area, and the Lower Mainland right here in British Columbia, this could be the difference between securing your dream home or watching the market just simply pass you by. Who am I? My name's Darin with the Germyn Group, a real estate team here in Surrey, BC, serving Surrey and the surrounding municipalities. If you need to chat with a professional, you can hit us up in the description below to book a time to speak with me and my team about your real estate needs. So before we get into these changes and how they're going to affect the market, I want to paint a little bit of a story for you. And this is a very real story about some clients of mine. We'll call them Sarah and James just to protect the innocent, but this is their experience in trying to buy a home in the last 2 years. They're a young couple with stable, well-paying jobs and have an excellent credit score between the both of them. They had been saving for a home for years and demonstrating financial discipline and responsibility, trying just to really make it work. This is a problem that we have a young couple who has great paying jobs, good credit, and the intention to buy a home along with a big down payment that can't get into a property. They couldn't qualify for a mortgage because of the high down payment requirements and the limited access to 30-year amortizations, meaning stretching out their mortgage for up to 30 years, forcing them to sit on the sidelines, unable to take advantage of the current market conditions, watching homes that they absolutely were in love with come up for sale and then just eventually be bought by other people. As you can imagine, this left them feeling left way behind. So the impact of these reforms on people like James and Sarah, well, they're absolutely huge. The increase in the mortgage cap from 1 million to 1.5 now opens up options that were never available to them under the old regime. And the expansion of mortgages from 25 years to 30 years, well, that just makes payments that much less expensive to alleviate their monthly carrying costs to own a property. And for the very first time, they feel empowered to act and are able to finally secure their dream home as of today. And here's the thing, Sarah and James, well, their story is not unique. They represent thousands of Canadians from coast to coast who have had similar problems under the old mortgage rules. There's many people that have been locked out of the market because of these, and well, that, as of today, is all about to change. So what are the two big changes and how are they going to affect somebody like you watching this video? Well, let's dive into them right now. The first change is the cap for down payments for insured mortgages. So what's happened? The cap for the down payment of insured mortgages has now changed from $1 million up to $1.5 million. So previously, what was the story? So you used to have roughly about 7 to 8% in total of the total payment in down payment to buy a home up to $1 million. But the problem was, as soon as that home for $1 million became even $1 more expensive, you now were required to have a 20% down payment to buy that exact same home. That change in threshold from $1 million to anything even slightly above that automatically triggered the requirement to have 20% down. And this made it incredibly challenging for home buyers who didn't have monstrous size down payments. Now younger families and first-time buyers in expensive markets like Vancouver or Surrey can now consider homes that were previously out of reach. So let's put that in perspective a little bit. What does that all really mean? Well, let's take a home in Surrey as an example that was priced at $1.2 million. Well, previously, someone wanting to buy that very home needed a down payment of $240,000 to get it. That's insane. But as of today, well, they only need to now have $95,000 of a down payment. If you're doing the math at home, that's a difference of $145,000. It's estimated that about 20% of homes in Canada are priced between $1 million and $1.5 million, potentially signaling a sizable boost to activity from this policy. The Lower Mainland market here in BC is disproportionately going to benefit from this new policy compared to urban centers in most other provinces. So with more and more buyers being required to enter the market at higher price points, obviously this means that there could be more demand for homes that are priced between $1 million and $1.5 million in the Lower Mainland, or really anywhere in Canada for that matter. And of course, this could drive competition for a housing market that seemingly looks like it's progressively getting a little tighter each and every day. More on that later. So what's the second change that you need to be aware of? Well, that's understanding that you can now get a 30-year amortization on a mortgage rather than a 25-year. Now there's some caveats to that, and let me explain what that means. That's just really the length of time that you can have a mortgage on the property that you buy, how long it takes you to repay your entire loan. The return of 30-year amortizations for insured mortgages reduces monthly payments, giving buyers more breathing room. In an effort to revive slumping pre-sales, amortizations will also be extended for the purchase of all newly built homes. This should offer some help to activity in the new home space, supporting housing construction in turn. And this isn't the first time that the federal government has extended amortization periods. This isn't something new. In 2006, CMHC began a pilot program to begin insuring mortgages with 30-year amortizations instead of 25. That same year, this program became permanent, and CMHC also announced that mortgages with amortizations of 35 and 40 years could be insured. When I got my first mortgage on a property, I had a 35-year amortization, so they play with these things all the time. And that means that these changes make a sizable change to the status quo from what we were dealing with prior to. There's no denying that lower monthly payments simply make owning a home much more accessible and affordable for everyone, even those with tight budgets. And speaking of making things more affordable, or at least keeping more money in your pocket, if you are someone that's thinking of buying a home this very year, you're going to want to check out our download available in the description about 21 grants and rebates available for home buyers and homeowners. To put in perspective how significant this change really is, let's use an example of someone who's spending $750,000 on buying their very first home. Now that they can choose to instead pay back their loan in 30 years rather than just 25, this is going to result in a savings of hundreds of dollars per month, money that they can put towards whatever they like, and ideally they're just going to put into the bank or back into the property. And lower monthly payments will likely lead to more buyers entering the market, which in turn could drive up competition. And this isn't all just good news for a home buyer either. The sellers are going to benefit as well, because now more buyers are able to enter the market, not only because of the extended amortizations, but those homes that were priced between $1 million and $1.5 million, well, the lower down payment is going to help make those much more attainable for many people. The surge in home sales in early 2024, after bond yields dropped a lot at the end of last year, and in the spring of 2023, when the Bank of Canada stopped raising interest rates, showed us that Canada's housing market reacts quickly to changes. However, I don't think these new mortgage rules alone is going to lead to a massive housing boom. Instead, they'll probably give a smaller boost to a market that's already improving into 2025. This is thanks to having lower borrowing costs and a slightly better economy. But here's the catch. As home buying becomes more affordable, home prices, well, they simply might go up, which could ultimately cancel out some of these benefits we're talking about in today's video. Clearly, we cannot predict exactly what's going to happen with prices and the housing market, but it's clear that this is a positive step to help give the housing market a boost. With that said, more buyers entering the housing market, well, it's surely possible that home prices could rise as a result of that, among many other factors. Of course, as always, I'm curious what you think, and you can throw your opinion down in the comments section below of this video. If you found this information useful on the new mortgage changes, please consider sharing it with somebody that you know that's looking to buy a home in 2025, or just simply give it a like so that YouTube algorithm helps push out this good information to somebody else that might find it useful as well. And I also owe you a little bit of an apology, because in today's video, well, I didn't really give you the full story. There's going to be some pretty significant considerations that you're going to want to make if you are considering buying a home in 2025. And we've got a video coming out on New Year's Day, January 1st, of everything you're going to want to know that could severely impact your decisions on buying real estate. Now, if you're watching this video before January 1st, you're going to have to subscribe to make sure that you get updated when that video gets released. But if you're watching afterwards, well, guess what? That video is right here and it's coming up next. We'll see you over on the next video. Cheers.